John Ulzheimer is known as one of our nation's most recognized credit experts. Having worked for 28 years in the credit industry, John has become one of the most prolific speakers about credit and the go-to authority on answers to credit-related questions. Credit Countdown with John Ulzheimer.
Hello, my name is John Ulzheimer. I am a consumer credit expert. I've spent some 30 years in the credit industry. Spent time at FICO, the credit scoring company, and also Equifax, which is one of the 3 generally recognized national credit reporting agencies. Today I'm going to do a little bit of myth busting, and I get a lot of questions from consumers regarding the information that impacts their credit scores and why certain information does impact their scores versus other information that does not impact their scores. And so today I'm going to talk about stuff that does not impact your scores that people may assume or believe that actually does impact their scores, because it may be reasonable to expect that certain things impact your score when in reality it does not. And so let's go. They're not in any particular order, so don't try to read anything into that, but let's take them from top to bottom. Number 1, the interest rates that you're paying on your loans. Your APR on your credit cards, interest rate on your auto loan, interest rate on your student loans, interest rate on your mortgages. Interest rates are not on your credit reports, all right? So you don't look at your credit report and see, oh, American Express, 18.9%. Citibank credit card, 24.9%. The APR for your credit cards is not on your credit report, so therefore it's not taken into consideration into credit scoring systems, all right? Obviously, interest rates are important because this is the fee you pay to service debt. So you want APRs and interest rates to be as low as possible, because then you're paying as little as possible to carry debt from month to month. The second one, this one drives people nuts. Wealth metrics. There are a lot of wealth metrics. And what a wealth metric is it is information that kind of defines how much money you make, or net worth, how much money you have in the bank, how much money you have saved up for retirement, how much money you have in your pocket. Anything at all that defines your capacity or ability to make payments because of the amount of money that you have is generally considered to be a wealth metric. So wealth metrics are not considered in credit scoring systems for a couple of reasons. It's not that they're not important. I mean, a bank wants to know how much money you make before they're going to give you a mortgage loan. A bank wants to know how much money you make before they give you a large business loan. So wealth metrics are absolutely important, don't get me wrong. They are impactful and they are considered when you apply for credit, but as far as the credit score goes, they are not considered. So they're not considered for a couple reasons. Number 1, they're not on your credit report. So just like interest rates, not on your credit report, it's not considered by scoring systems. Income is not on your credit report. Therefore, you can't calculate the debt to income ratio by looking at someone's credit report, because you're missing half of the math in order to do that equation. How much money you have in your bank accounts, how much money you have in your brokerage accounts, how much stock you own in whatever company, how much money you have in your pocket. None of that stuff is on your credit report, therefore it cannot be considered in credit scoring systems. You will have to disclose these things when you apply for loans. There's a place on your application for things such as income. And your employer doesn't send information about how much money you make to the credit bureaus, and so therefore that information is not reported on any of your credit reports. This one is actually good news for some consumers. When you apply for credit, I think it's commonly known that a lender is likely going to pull one or more of your credit reports and consider one or more of your credit scores, either your FICO score or your Vantage score, or a combination of multiple scores when you apply for credit. That leaves a credit inquiry on your credit report. Credit inquiries might impact your score. It's not as simple as saying they will. That's not correct. They might. But the decision made by the lender pursuant to the application is not on your credit report, and therefore is not influential in your credit score. There's nothing on a credit report that indicates you've been denied. There's no section of a credit report, credit denials, and then a list of companies that have denied you credit. There's no information on a credit report that indicates denials. There's only information on a credit report that indicates that you have applied or have otherwise given the company permission to access your credit report. Now, obviously there's more than one way to skin a cat, right? You can kind of figure it out, if you will. If you have an inquiry from Citibank and you have a Citibank loan on your credit report that was just opened, you can logically make the assumption that there is a relationship between the inquiry and the approval and therefore the new account. Fine, that's great, but that kind of chronology or linking together of information is not something that's considered in credit scores. And because it's not considered, then if you have an inquiry from Citibank but no Citibank account anywhere on your credit report, you also cannot assume that they denied you, because that may not necessarily be true. And therefore that linking or the lack of an accompanying loan to an inquiry does not necessarily equate to denial, and credit scoring systems don't consider that combination or lack of combination of information anyways. And so again, the fact that you were approved or denied isn't important and is not considered because it's not on your credit report. Now, some of you may be asking, well, wait a minute, if there's no account but there's an inquiry, then obviously you were denied. That's not true either. You may be shopping for a loan and you may not like the offer you got from a certain bank, and therefore you may have told them, I'm going to go elsewhere. You may have been approved and just chose not to take out the loan. Second, you may have applied for credit with a lender that doesn't even report to all three of the credit bureaus. They just pull the credit report from one credit bureau but then report information to a different credit bureau, or they don't report information at all. And therefore there's never going to be an associated account or loan on a credit report with their inquiry. So again, you can't just assume that the inquiry always equates to an approval or always equates to a denial. It's not that simple, all right? And then finally, there's a lot of things that you can put in this category. Stuff that's not on your credit reports is never, ever, I'm not sure how many other times I need to say ever, gonna be influential in your credit scores. Stuff on your credit that is not on your reports is not considered in credit. Credit scoring systems are amazing machines, right? But it's limited. They're limited to only see what is on your credit report. So in that respect, they have blinders on, right? So if this is the information on my credit report, this is the only thing that a credit scoring system can see. It cannot see public records that aren't on my credit report. It can't see wealth metrics that aren't on my credit report. It can't see anything about level of education, my beliefs, anything at all. Whether I turned left when I should have turned right. Anything like that. None of that information is on a credit report. Criminal record is not on a credit report. Therefore, it cannot be considered in credit scoring systems. The premiums I pay on insurance policies, whether I have insurance, whether I have a life insurance policy, none of that stuff is on a credit report. Is it important? Of course that's important information, but for other things, not for a credit score, all right? So if you ever run into people who try to argue that, doctors all have great credit scores, professional athletes all have great credit scores, wealthy hedge fund managers all have great credit scores. Well, that might be true, but it has nothing to do with the amount of income they make, because the income is not influential in a credit score. That's also not true as a practical matter. It also assumes that doctors never miss their payments and professional athletes all manage their credit properly, or that people who manage hedge funds and make a gajillion dollars manage their credit properly. It's also kind of a slap in the face to people who do not make a lot of money, and therefore if you suggest that people who make a ton of money have good credit, then you also kind of have to suggest that people who don't make a ton of money have bad credit. That's factually inaccurate. People who are hourly wage workers with entry-level jobs somewhere don't have bad credit simply because of that. If they pay their bills religiously, they're gonna have killer credit scores regardless of the money that they bring home every single month. So just a couple of things that are not considered in scoring systems that people might assume are considered in the scoring systems. So if you have any questions, and especially if you have a question about something that I didn't cover today and you're wondering, hey, wait a minute, what about this? Is that considered on my credit score? What about that? Is that considered on my credit score? Drop it in the comments section below and I might do a supplemental video and answer that particular question. Thank you very much for watching. I appreciate it. Have a great rest of your day and we'll talk again soon.
For more videos and credit tips from John Ulzheimer, go to www.tradelinesupply.com.